thank you so much for joining me. How are you liking Oslo?
Oh, it's amazing here.
It's your first time, right?
Yes.
How do you find the conference? This is a little bit different, I feel like, than some of the other ones we've been to, Bitcoin Miami. Doesn't just have Bitcoiners, right?
Yeah, but it's mostly human rights, and the fact that Bitcoin's here is mostly focusing on a human rights angle, right? So how to help the people that are most most needing of it, right? So a theme I've had is that basically, as useful as Bitcoin is to me in a developed country, it's kind of optional, at least at the current time. Whereas for a lot of people, it actually can change their life in ways that, for me, it's more like an investment or more like, an asset compared to other assets. Whereas for them, it's, having, cryptographic money, Bitcoin, censorship resistant value that they can change peer to peer, that they can move with them, that it's hard to, confiscate, that's hard to block in any way, changes everything.
Well, I saw your panel yesterday, you moderated, can Bitcoin reach 1 billion people? So I'm going to throw that question to you. Can Bitcoin reach 1 billion people?
I think it can, especially with all the scaling methods, right? So there's Lightning, there's other scaling methods, and then some people use it custodially, right? So everyone kind of uses what specifically they're looking for with it. But I think the way it's designed, like any other financial system, it goes up in layers. And so each layer kind of preserves exactly what you want it to do. So there's like a settlement layer, then there's fast transaction layers, and then you can have things like more expressive layers, right? There's all sorts of things you can do with it. And so I think long run, there's no fundamental issue with scaling, although there are just hard programming challenges, and then also just, the cultural adoption as it grows.
You were one of the people that was kind of predicting volatility in choppy waters, especially when it comes to Bitcoin's price this year. Can you tell me a little bit about what you think of this recent sell-off and whether you think it's going to potentially go even lower?
So basically, historically, and the sample size is not big because we're talking about a 13-year-old asset, it doesn't do well in economic decelerating environments. And I had questions like, okay, would that pattern hold this time? Or because there's higher inflation, it's the first time you've gone through a down cycle that's inflationary in Bitcoin's history. And I was like, that's a new variable. So I was like, it's probably not going to be great for price, but we'll see. And so far, it has been, pretty bad for price, obviously. And I started to get concerned when I saw Luna Terra buying the Bitcoin. I was like, now I can envision a capitulation event forming. So I actually wrote about that. And so that kind of played out, unfortunately, as expected. It's kind of earlier than I thought. So I don't really have a high conviction if we're going lower or not. It's, it's not like Bitcoin necessarily bottoms as soon as the economic indicators bottom. It's not that correlated, right? So it could bottom ahead of time, it could not. I think we're already in kind of a value range, but that doesn't mean we can't go lower.
Can you tell people what you think the big takeaway is from the Luna Terra meltdown?
One, that there are a lot of Ponzi schemes in the space, that basically there are things that are just based on first in, first out, that are just unsustainable. And a lot of projects are just based on these kind of artificial temporary incentives. So, you put kind of funds into a protocol that lets you pay out higher than market yields, but it only lasts a temporary period of time. So it's kind of like bootstrapping. And that only works if you have actually a good product. Like if I have some sort of say protein bar and it's new and it's great and I'm trying to sell it, I might do marketing to, have it reach critical mass, but then it has to become profitable and self-sustaining on its own. It has to actually be a good product. Whereas if I'm just trying to sell like air, if I'm trying to sell fraud, after my initial marketing runs out, there's nothing there. And that's what a lot of things look like in the crypto space. And I think people have to be very careful about what they go into, especially outside of Bitcoin. And I saw a lot of people say it. I think it's the best way to describe it. If you don't know where the source of yield is, you're the source of the yield. You're the exit liquidity if you can't find who else is.
I think this has sparked more conversation surrounding stablecoins, and certainly we might have some regulations sooner as a result of the Luna Terra situation. But can you offer your perspective on stablecoins? Because we've been hearing panels that talk about how in the developing world, people need access to the dollar, and stablecoins really have been the answer. So what are your thoughts on stablecoins? And specifically, Luna was an algorithmic stablecoin. So is there any difference in terms of whether you think one or the other is better?
But yeah, there's a major difference. Algorithmic stablecoins have been fraught with failure. This is not the first one that blew up. This is the biggest one, but there's been multiple blowups for algorithmic stablecoins. It's just inherently an unstable design. Whereas fiat collateralized stablecoins, they have risks. I mean, they're centralized. You have to trust that them and their accounting firm are auditing it properly. But for a lot of people, if you're in say Lebanon or Argentina, if you store dollars in the bank, they can be forcibly converted into local currency, so you can lose your protection there. So in many cases, trusting an outside and for them an international organization to kind of custody their dollars is preferable to trusting a local custodian. And so for whatever risk that might have, they perceive it, I think in many cases rightly, as less risk than domestic banks for dollar holdings. And then especially for people who, you don't have a ton of excess savings, you can't withstand, 30% volatility, 50% volatility on your asset. So a lot of them at the current time, the way the market's structured, need dollars.
Yeah.
So that's why it's outside of Bitcoin, it's one of the few areas that I've been bullish on is the proliferation of stablecoins, because a lot of them are just used for trading, which I'm not, I don't think that's a very sustainable market overall. But then the actual payments, there is a decent amount of activity there, and so it's got downsides, but I think it's an important part of the market.